Welcome traders, and in today's report from the market chartist Steve Miley here for FX Explained, we're going to be focusing on a couple of the major US and European, UK actually, equity indices, starting off in here with the S&P 500 E-mini future. Now, we have had this surging rally. Now, what's driven this surging rally? Let's just do a little bit of a recap in here from the beginning of November. So early November, anticipation of a Biden victory. So that was seen as a positive in here. Markets initially rallying higher ahead of the US election. Then we had this choppy session. You can see it in here, the bars in here widening out during the US election result on the Wednesday after. The last Wednesday in here, we saw the market far more choppy, and now that's become an important low in here at 33.19. But the market used that to launch off of, and when it was clear that it was going to be had a kind of a Biden victory. Now, not only a Biden victory, but a Biden victory with the Republicans likely holding the Senate, which means mixed government, split government, which the markets like because it means then the Democrats don't have full control, and it means then less likely to be imposing higher taxes and corporate governance, which could be negative for the corporate world and negative therefore for the stocks in the S&P 500, particularly maybe the tech stocks in here, who there was concerns that maybe there would be some more stringent antitrust, anti-competition laws put in place that may damage some of those tech stocks, those big tech stocks. So the market's continuing higher, liking not only the Biden victory, but the split government and the split Congress, with the Republicans likely holding that. Then on Monday in here, we get the announcement up here, okay, that Biden has won over the weekend. The market shoot higher on Monday, but then not only that, we get Pfizer announcing particularly strong results from their trials of their COVID-19 vaccine, 90% success rate, and the market's really liking that, opening up maybe the global economy again if we can get a vaccine in here, and potentially that coming relatively soon, maybe the end of 2020, early 2021. The market's shooting higher on that. Importantly, not only taking out this kind of topping line in here, we'd already reversed this line in here the previous week. We reversed this topping line up here. We also took out the mid-October peak here at 35.41. From my perspective, that was enough to shift us all to more bullish on an intermediate term front. But then we also took out, this is, remember, the all-time high for the S&P 500 at 35.87, and then shooting through further extension resistances up to 36.68. Now, since then, the market has dipped back lower. That dip back lower has come as we've seen rotation out of the major big tech new era stocks, the likes of your Facebook, your Amazon, your Apple, your Google, your Microsoft. We're seeing a dip back lower in here as we've seen rotation out of those stocks. Remember, those stocks make up a big percentage of this S&P 500 stocks. So as you've seen rotation, those stocks have fallen. The Nasdaq's actually come back lower, but with the old era stocks doing very, very well. So the likes of airline stocks, the likes of Boeing airline manufacturer, the likes of bricks and mortar retailers, not your Amazons, more like your Walmarts. Okay, these are all doing a lot better in it. So we're going to old economy value plays in it. So this kind of pandemic recovery story, I'm seeing those stocks doing very, very well. But the S&P 500 being held down a little bit by that rotation. However, we're looking for, once that rotation takes place, then we're looking for upside progress to come back through. And technically, look, we're holding up this trend line, this very accelerated trend line that comes up for November in here. We're holding above that. We swung down to 35.06.5. Whilst above there, the short-term pressures remain very positive. Intermediate-term pressures remaining extremely positive. Okay, let's take a look at the FTSE. Before we do that, just let me say, please guys, if you are liking what you're seeing, do hit that like button on our YouTube channel, and don't forget to subscribe to that channel if you can. Let's take a look at the FTSE 100. This is the UK index, the top 100 stocks on the London Stock Exchange. Look at this surging rally in November. Now, really importantly, the FTSE has been a real laggard. It's been underperforming the major equity indices. Look, going down in here all the way from June. We've been actually in a downtrend from June, with many of the other European, US equity indices doing very well. FTSE been a real laggard, been really underperforming, but shooting higher in this past week in here, a week and a half since the beginning of November. Not only taking out this downtrend line here, not only taking out this mid-October peak, that was enough for me to switch to intermediate term outlook to more bullish through 60.12.5. But we've wiped out further resistances here, 61.28, 61.72. But in the last 24 hours or so, wiped out all of this resistance here from the summer, from August July and June peaks. All of these peaks from 62.67.5 up to 63.10.5 wiped out all those peaks in here. That's really rejected this more negative theme, and now really the market's aiming for this June high at 65.12.5. Maybe this week, certainly going into and through mid-November, and then we're going to be attacking these levels over here, really reinforcing and re-energizing the intermediate term bullish theme. Now we are seeing dips on these markets in here overnight on these major equity indices, but still looking for upside pressures to come through. I'm going to leave it there. Wish you all a great trading day, guys. Please do stay safe. This has been Steve Miley, the market chartist for FX Explained. Thank you so much for watching. Now, if you like what you've seen, please do hit that like button and don't forget to subscribe to our YouTube channel. And, as always, have a great trading day.